Greetings and thank you so much for visiting this channel. Today I'm going to review JP Morgan Chase, a incumbent stock. It is one of those stocks that I've been closely monitoring. But before we get started, I just want to disclaimer that this content is meant for educational purposes. It's not investment advice. So please pause and make sure you understand this disclaimer before you proceed. And for the day, I'm going to share with you the business model for JP Morgan and also their earnings highlights and do a quick analysis of their finances for the past 10 years before sharing whether I would consider investing in JP Morgan because of the merits and the risks. So, for those who don't know me, my name is Isaac Jonas. I like to create content on personal finance and investing, but I'm an economist by academic training, but I also like to share some insights. And now, JP Morgan is one of the largest and most complex financial banks institutions in the world, and they operate and they have about 3.9 trillion dollars in assets, and they operate across other countries, and they have major segments such as consumer and community banking, corporate and investment banking, commercial banking, and asset and wealth management. So they are quite extensive. But before I invest in a stock, I want to look at certain things quickly. I like to look at the return on equity. I can see here it's about 15%. They also do share buybacks, which is something that is good. Their 1 year high was 200, almost $201, but it went as low as $131.81 cents over a period of a year. But I also like to see a stock that has a good return on invested capital. Here it's 7% for a bank. It's not really bad. They also offer dividends. So this is something that is interesting. Now, um, I also like to invest in stocks that consistently beat earnings. So I can see that most of the time they beat, 3 out of 4 times here they beat out their earnings expectation. But in 2023 they also did not beat their earnings. They missed. So that's something to see. But if it's more than, it's consistent, like 2 3 quarters, then it becomes concerning. But it's just one time. Sometimes maybe these things happen because of other factors like the macroeconomic environment. And they will have their second quarter earnings call. um, that will be 16 May. They will have a general meeting 16 May 2024, and you can see here. So I like following these events because it's important to hear from what the leadership, the CEO or the chief financial officer will be saying with regards to the direction the business will be taking. And when I look at the finances, I like to look at the finances for the past 10 years at least. So you can see here the net income for JP Morgan. It has been good. Uh, Recently it was like 48 uh, 48 billion, right? But it has been going up. Sometimes it goes down, it fluctuates, but mostly there's an upward trend if I look at this. And because it's a bank also, I like that it also gives dividends, $4.25 per year. So that's good if you are looking for, income, um, for, let's say, you are retiring or just extra income. And then when I go to the balance sheet, the number that I will be looking for is the long-term debt. You can see that they have about 392 billion, right? But because it's a bank, you see that the total liabilities, they have 3.5 trillion, right? But their business is to loan out money, so it's to be expected. But when I look at the cash flows, I then divide the long-term debt with the cash flow for each year. So for example, for this year, currently, let's say if I look at 2023, I would say 392 billion roughly, and divide by the cash flow, free cash flows for that particular year, which is 13 billion. So you can see that they don't have as much cover, right? So that's something that's of concern. But it's a bank. They have different risk mechanisms, risk management mechanisms, but for me, that's something to be concerned about. But in this case, I also see that some of these executives, they were paid in terms of shares, and they got paid in shares, and they sold their shares. But I like to see insiders buying, then that would give me the confidence. But I also like to see other gurus, other people that I look up to just see what they are doing. Like you see, Bill and Melinda Gates, they bought some shares for JP Morgan in Q3 2023. So that's the latest filing that I pulled out here, and you can see other hedge funds that are buying. So in other words, it's a vote of confidence, but I do my own due diligence. And I also compare the stock with industry peers. You can see that in terms of the return on investment, they are second only to UBS Group AG, or UBS Bank, which is like 32.34 percent return. You can see that here. It also actually has a much bigger moat, which is competitive advantage. So compared to these two banks, JP Morgan, I would closely want to see this bank and analyze it. It's actually very interesting. But today I'm just analyzing JP Morgan. It has a good moat relative, 35%. It's a competitive space, and also the outlook in the banking sector, it's one of the biggest. So they have a good reputation. They also manage their funds well relative to other banks, and the stock is highly liquid, and it beats most of the time, it beats earnings. But I would wait. Let's say if it drops to $130, maybe I will consider buying some shares. But in some cases, what happens is some funds or exchange traded funds, they buy shares for these banks. So to get exposure to some of these shares, that's what I do if I don't want to be limited to one particular bank. But this is one of the top banks actually in the world, and I wouldn't mind picking up some shares. Let's say if it was to drop to maybe 130, if it's something that is not systematic or something that is really concerning, it depends on what causes the drop of that particular stock. So that's it, and I would say right now it's way at the top. I would not buy. It's not investment advice, but it's a very interesting stock. They've been beating earnings, and they also have dividends and a lot of other good metrics that I have shared here. So thank you so much for tuning in and also following through up to this point. And if you haven't considered subscribing, please do so that you don't miss content like this in the future. Have a wonderful week, and may the markets be with you. All the best. Thank you.